Innovative ideas, emerging trends, industry insights. We're connecting with Conning on RIN TV. Investment in emerging markets looks attractive, particularly when more developed market economies are experiencing slow growth or low expected yields. With the US economy slowly recovering and Europe still struggling, we wondered how insurance company investors might view emerging markets today. Here to discuss emerging market investments is Gulen Tuncer. She is CFA and a director and research analyst at Conning, responsible for corporate and emerging market bond research. She joins us now from Conning's headquarters in Hartford. Gulen, welcome to the program.
Thank you for having me.
So Gulen, how did investments in emerging markets do in 2014?
Despite volatility in the larger constituents of this space, emerging markets performed quite well in 2014. Excluding Brazil and Russia, the outperformance was actually even more notable, that the returns were much better than US investment grade and US high yield indices.
What were the major issues influencing the markets?
2014 was a year full of major events. It was a year of elections and the Fed's quantitative easing, the potential for European quantitative easing and Japan's QE, in addition to lower oil prices, impacted the market. Political instability in Russia with the Russia and Ukraine conflict, followed by economic sanctions against Russia, the Brazilian elections, and the corruption probes into Petrobras and related entities in Brazil were all part of the backdrop. It's worthy to note that many of these events actually remain contained to the culprits, and we saw most of the rest of the market perform quite nicely. We do think that it's a testament to the progresses made by emerging markets over the years.
What are you looking for in emerging markets going forward?
While we think that emerging markets have come a long way since late 90s, we do think that volatility is here to stay due to idiosyncratic risk and market technicals. On the sovereign side, we like countries that have lower external debt, better commitment to reform agendas, and healthy level of reserves compared to their financing needs. We do think that countries that fit this profile provide better diversification to investors. We also do think that in a rising US rate environment with weaker currencies and low commodity prices, investors are potentially better positioned to benefit from an upside in emerging markets should valuations weaken again.
Where do you see the greatest opportunities in emerging markets?
As I mentioned, we do like the countries that are committed to reform agendas in an environment where economic growth is weak, there's currency weakness, and potential inflationary pressures. We do think that countries that fit these profile offer investors good opportunity, such as Colombia, Indonesia, Mexico, and to a lesser extent, Philippines. On the corporate side, we do think that there are companies that offer good credit fundamentals with incremental yield.
Well, we'll see what happens the rest of the year. Gulen, thanks for joining us.
Thank you.
For more on investment strategies for insurance companies, visit the Conning website.